Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. I know everyone likes to predict the next crash and how much they love to say there will be a big crash coming with a very somber and serious tone as some sort of warning and to spread fear. They do this every year, and as they say, economists have predicted 7 of the last 2 crashes. If every year you say there is going to be a crash, well, guess what? One of those years, eventually you'll be right. Everyone seems to think it's cool predicting bad news like crashes, and it probably gets more clicks. Well, here at Tesla Economist, we like to stay positive whilst preparing for any potential downsides. So rather than expecting a crash to come, well, what if it's a boom? Why don't people predict booms? What if there is a serious market boom in the event of everything that has been happening? Please don't think I'm being insensitive to what is happening in Ukraine, but this channel is about economics, so we will be discussing potential economic impacts, particularly as how it pertains to Tesla. In the past, I've often discussed about potential recessions coming and how to prepare for them, but I've also said that no one can predict one. Sure, everyone is expecting one. It's been 14 years since the global financial crisis, but it still can't be predicted. There is equally just as much chance that we could enter another boom stage. The Dow is currently just over twice what it was at the peak of the last boom around 2007. If we look at other booms in the past, like the dot-com bubble, the Dow Jones almost quadrupled over a slightly shorter time period when compared to the peak of the market at the previous boom in 1987, aka Black Monday. Did you hear that? We have before seen the difference in the Dow up 4 times from peak of boom to next peak of boom, compared to where we are currently, where the Dow has only about doubled since the last boom. This is a big difference. Often in a boom, we see it get the craziest right before it crashes. In June 1999, the Nasdaq doubled in 7 months, just before it crashed in March 2000. Now, as far as war is concerned, going by previous invasions in history, it could seem that we have seen the bottom of the market with uncertainty before an invasion, implying it should only recover from here. Of course, there are other various macro issues still at play. We'll just try and identify what we can individually. But going by this, there is a good chance of the market recovering soon. Other macro issues like the excessive money printing we've been seeing, this should further inflate the markets. Yet they haven't gone insane. Sure, some stocks really are feeling the effects of this changing world more than others, but I'm just looking at the overall markets and indexes. The other side of quantitative easing was the exceptionally low interest rates we've all been feeling too. Low interest rates will always stimulate an economy as money becomes cheaper. It just has the downside of inflation, which we're now seeing. FYI, if we made the same comparison with the S&P 500, we would have seen the S&P up about 5-fold from the 80s to the 90s and almost 3-fold since the property bubble peak. A lot of the growth we've seen in the market isn't just regular economic growth too, but a transition of industries, where companies like Tesla and Zoom thrive in this new world we're creating. These companies didn't grow just because the economy boomed. Of course, a potential boom is only further again perpetuated by low interest rates. Yes, rates are rising all the way to a level where they used to be to stimulate an economy in a recession. Yet we're using the same level of rates to try and slow down an economy. Although there is so much debt, any slight adjustment could have a big impact. I guess we'll have to wait and see what effect rates really have. Remember, in the 80s, we saw interest rates as high as around 20%. That can't happen this time. The Fed alone can't afford the interest. Obviously, supply chains have been responsible for a lot of business to run constricted due to not being able to get enough supply of products to meet customer demand. These should start to ease up now COVID is calming down. When sorted, it should mean that prices come down, supply increase, spending increases, and economies improve. Although I would say there is a good chance that governments may want to do what they can to rectify supply chains as much as possible, due to it having such an impact on inflation. Of course, we can't discuss supply chains without mentioning semiconductors. Towards the end of this year, we should start seeing a much larger supply of semiconductors. Once semiconductors become more abundant and prices come down, then this will reduce a lot of costs in places where it's savings to the end user, meaning they have more expendable income to consume more products and thus further add to the economy. Or the semiconductor shortage being rectified will be savings for businesses and thus add to profit further, and again add to the economy. A lot of businesses have a lot of backlog, simply waiting for supply, and they're not able to even order all the supply they want, as their distributors have limited supply too. Once businesses finally have the inventory they require to serve their customers, then business will start picking up more too. Although the rise in the stock market over the last couple of years may not have been as big as some, it was still considerable for many, enough to feel it in their net worth. Almost everyone's property and stocks have increased. Consumers now have more funds available for spending, potentially. And they probably have a lot of pent-up spending to do once all these items are back in stock that people have been waiting to buy, or become more affordable. Other people desperate to travel to see relatives or friends, or just go on holiday. There should be a lot of consumption spending to come, thus more potential to push for a boom. Of course, if the boom grows, so do consumers' asset prices and thus potentially spend even more. Right, so lots of potential consumption to come to stimulate the economy. But there is also a lot of production to come, and I do mean a lot. The entire world now understands that we should not be running the planet on fossil fuels. It would appear that the world has decided that instead we will use energy from the sun, wind, or nuclear, and store the energy in batteries. In addition to that, all transportation will eventually become emission-free too, and mostly electric. So all energy will become renewable and all transportation electric in the world. This is what it looks like is happening, with the backing of governments, citizens, and corporations. Now I have this theory that perhaps rebuilding these two industries might also be good for the economy too, and all that spending may further stimulate economic activity. Of course, it just so happens that Tesla is at the epicenter of this expenditure. Tesla looks like the company to benefit the most within that movement, and are gearing themselves up to be able to have as much impact as possible. Of course, with rising oil prices, this will continually make solar and EV better and better value. If the alternatives keep getting more expensive, this will mean there is continued investment in alternative energy. Of course, OPEC could just flood the market with cheap oil too. What if we enter another roaring 20s, like a 100-year cycle? We entered the roaring 1920s just after the Spanish flu too, similar to the pandemic of today. The boom could even last for the most part of the decade. We don't know how this might play out. Anyway, I'm not trying to predict the future, merely offering more options to how the future might turn out, and based on solid reasoning as to how this might play. Everyone just loves to predict crashes, especially based on what has just happened or happening in the world right now. People are so quick to jump to all signs of pointing to a crash, but a boom is also possible. And in a boom, right now, what is going to be the number one coveted item? A Tesla. Obviously, I can predict a boom as likely as I can predict a crash. My point is it's just as arbitrary to predict a boom, and I even gave several reasons why we may not have yet even seen the real boom. We just don't know. Besides, even in a recession, I wouldn't have expected Tesla's stock price to drop as low as it has recently. The stock price is always going to be impossible to predict. For those contrarian investors out there who'd been waiting for a crash and bought near the bottom, well, I guess that's what they call the smart money. Or maybe they just got lucky. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.